Welcome back to the channel. The S&P 500 has notched an impressive 8 consecutive weeks of gains, pushing markets to new highs. But beneath the surface, a growing tension suggests we might be heading into an air pocket. Inflation remains stubbornly high, and bond market volatility signals a disconnect from equity confidence. Today, we're diving deep into the macro landscape, exploring a cautious investment stance, and breaking down 3 key stocks navigating this complex environment: FIVN, Okta, and Zoom Video Communications. We'll cover their fundamentals, technical setups, and the critical risks you need to watch. Stay tuned, because Thursday's PCE inflation data could be the definitive pivot point for what comes next. Our current investment stance is moving from bullish to tactically cautious. The confluence of persistent inflation and extreme systematic positioning indicates that a market pullback is increasingly likely. While the VIX remains low, it appears to be a trap, as bond market volatility, measured by the MOVE index, remains structurally elevated. This signals that equity confidence is out of sync with rates market anxiety. On the economic front, we're seeing a no-landing scenario unfold. First quarter GDP printed at 2%, with second quarter tracking at 2.4%. Fiscal support from the One Big Beautiful Bill Act continues to provide a floor, particularly through domestic AI infrastructure spending. However, inflation remains a major concern. Both CPI at 3.8% and core PCE at 4.3% show the last mile to the Fed's 2% target is stalled. Supply chain shocks stemming from the Iran conflict pose a significant inflationary tail risk. Monetary policy, under Chair Kevin Warsh, has firmly signaled a high for longer plateau. We expect the Fed funds rate to remain within the 3.5% to 3.75% range through year-end. Talk of potential rate hikes could quickly return if Thursday's PCE data surprises to the upside. Looking at market breadth, energy and tech continue to lead the charge, forming what some are calling the unholy alliance. While we are observing a healthy broadening into mid-caps, the NASDAQ 100's relative strength index is nearing overbought territory at 68. Institutional flows also show high fragility, with ETA and risk parity funds reaching 95th percentile exposure, although corporate buybacks are providing some floor to the market. Our rule of thumb: until the MOVE index trends below 70, sustained equity rallies lack a solid macro foundation. First up, we're looking at FIVN, ticker FIVN. This company is a pioneer in cloud contact center as a service, or CCaaS, and is successfully pivoting its business model from charging per human agent to charging for digital workers, or AI agents. This is a rapidly growing segment, showing 68% year-over-year growth, contributing to its high-margin subscription revenue, which makes up about 82% of its total. FIVN achieved a major milestone in the first quarter of 2026, reaching GAAP profitability with $18.40 million in net income. Their adjusted EBITDA margin is a strong 24.4%, and operating margins are expanding as their AI products, with lower costs of goods sold, become a larger part of the revenue mix. The balance sheet is robust, boasting $724 in cash and marketable securities and an exceptional current ratio of 4.5 times. Debt is manageable, and the company has an aggressive $150 million share buyback program underway, with another $200 million authorized. We're projecting over $175 million in free cash flow for fiscal year 2026, translating to a substantial 10.3% free cash flow yield. FIVN's competitive advantages are clear. Their Genii Studio allows enterprises to easily customize large language models with their own data. They also benefit from high switching costs and deep penetration into large enterprises. Management has been efficient in cutting costs while accelerating AI product development, positioning the company as a potential acquisition target by a hyperscaler or private equity firm, given its attractive valuation. Next, let's turn our attention to Okta, ticker Okta. Okta is a leading independent provider of identity and access management, essentially providing the secure front door for companies. They're expanding their critical role from securing human users to securing AI agent identities, which is a new and significant frontier in the autonomous enterprise. Okta's revenue streams are split between their Workforce Identity Cloud, which secures employees and has high penetration in the Fortune 500, and their Customer Identity Cloud, which focuses on developer APIs for consumer apps and is a higher growth segment. The new AI Agent Identity segment is expected to be a major RR driver by 2027. The company achieved GAAP profitability in fiscal year 2026, reporting a net income of $235 million on revenues of $2.92 billion. Their non-GAAP operating margin stands at a very healthy 26%. Okta maintains a strong balance sheet with $2.55 billion in cash and short-term investments, conservative debt levels, and a current ratio of approximately 2.1 times. They are also executing a $1 billion share repurchase program, their first ever. Okta demonstrates best-in-class free cash flow margins of 30% with guidance for stable growth in fiscal year 27. Okta's competitive moat is built on its neutrality, working seamlessly across all cloud ecosystems, earning it the moniker, the Switzerland of identity. Switching costs are incredibly high, and Auth0 has garnered strong developer mindshare. Management has successfully navigated the company toward high profitability, and Project Glasswing has restored customer trust after past security incidents. The expiration of the dual-class share structure in 2027 is a positive for institutional governance. Our final company spotlight is on Zoom Video Communications, ticker ZEM. Zoom has successfully evolved beyond simple video conferencing into an AI-first collaboration platform, offering a unified suite of tools including phone, contact center, meetings, and team chat. Their strategy is to be the system of action for the hybrid workforce. The enterprise segment is Zoom's high-growth engine, up 7.2% year-over-year, while the online segment remains a stable cash cow. Notably, Zoom Phone has surpassed 10 million seats and is growing in the mid-teens. Zoom boasts best-in-class margins, with a stable gross margin of 78-80% and an exceptional non-GAAP operating margin of 41.1%. The company is one of the most efficient Rule of 40 businesses in the software industry. Zoom's balance sheet is a fortress, featuring $7.70 billion in cash and marketable securities and zero debt. Their current ratio is over 4 times, providing immense financial flexibility for aggressive share buybacks and strategic M&A. Free cash flow margins are impressive 40.4%, with guidance for $1.74 billion in FCF for fiscal year 2027. They have a $1.60 billion share buyback program in place, along with investments in AI Companion 3 and strategic acquisitions. Zoom's competitive advantages include unparalleled brand recognition, strong AI velocity, with AI Companion 3 adoption up 184% year-over-year, and a broad product suite that reduces app fatigue. CEO Eric Yuan has been disciplined in transitioning the company to an enterprise-first model while maintaining those incredible margins, demonstrating strong capital stewardship. Now let's turn to the charts for our 3 stocks, starting with FIVN. The stock has decisively broken out of a 2-year descending wedge pattern, now trading above both its 50-day and 200-day moving averages for the first time since 2024. The relative strength index is at 54, indicating a bullish regime, and we've seen a major bullish crossover on the weekly MACD. A significant volume shelf has formed between $20 and $22, with the point of control, or POSEK, at $21.50 acting as a key support level. We see a potential entry in the $21.80 to $22.80 range, with a target of $30 and a stop loss at $19.50. For Okta, the chart reveals a powerful V-shaped recovery, surging 34% from its late April lows. It has successfully reclaimed its 50-day and 200-day moving averages, and is currently testing a major horizontal resistance zone at $92. The SI at 62 signals a bullish breakout, and the MACD shows a vertical bullish crossover with accelerating momentum. Strong institutional buying volume has been noted on the rally. The 200-day moving average at $88 represents a high-volume node. A potential entry is seen between $86 and $90, targeting $110, with a stop loss at $78. Finally, for ZoomZM, the stock has completed a massive double bottom formation on the weekly chart, breaking out above its $98 neckline. It's now trading above all major moving averages for the first time in over 3 years, signaling a definitive trend reversal. The SI, currently at 58, has reset from overbought levels, suggesting the rally is sustainable. Both daily and weekly MACD bullish crossovers have been confirmed. There's a significant volume gap between $110 and $125, which could lead to a rapid move higher once cleared. We see an entry in the $102 to $106 range with a target of $140 and a stop loss at $94. Let's take a quick look at the key financial snapshots for these companies. For FIVN, current price, approximately $22.80. Target price, $35, indicating an upside of 53.5% dodgeball. Market cap, $1.70 billion, making it a small cap. Forward, PE, 7.0x, suggesting deep value. Forward, FIVN, FCF, 8x. FCF yield, approximately 10.3% dodgeball. Cash on hand, $724 million. For Okta, current price, approximately $90.80. Target price, $115, with a 26.7% upside. Market cap, $16.20 billion. A large cap company. Forward, PE, non-JP, 24x. FCF, 16x. FCF margin, 30%, considered best-in-class. Cash on hand, $2.55 billion. For Zoom Video Communications, ZMA, current price, approximately $106. Target price, $145, implying a 36.8% upside. Market cap, $32.50 billion, also a large cap. Forward, PE 16x, significantly below the SAS average. FCF, 13x. FCF margin, 40.4%, truly exceptional. Cash on hand, a massive $7.70 billion. Our conviction on FIVN is strong. We view it as the best deep value AI play in the market right now. With JAP profitability secured, an aggressive share buyback program in progress, and significant undervaluation compared to its peers, we anticipate substantial shareholder returns, either through multiple expansion or an outright acquisition by a major cloud player. For Okta, we also hold high conviction. The company has matured into a high cash flow machine, uniquely positioned as the independent player with the scale to maintain its neutrality moat in a hyperscaler-dominated world. The ongoing $1 billion buyback and return to GAAP profitability skew the risk-reward significantly to the upside. We expect a cybersecurity re-rating as the market acknowledges its strengthened position. Our conviction in ZoomZM is particularly high. We believe it is the most undervalued large-cap software company in the market. Investors are essentially acquiring a business with 40% free cash flow margins, a staggering $7 in cash, and trading at just 16 times forward earnings. As the market fully recognizes Zoom as a permanent enterprise platform rather than a mere pandemic fad, we foresee a massive re-rating. While opportunities exist, we must acknowledge the significant risks. On the macro front, the primary concern is the potential for a tactical air pocket in the market, driven by persistent sticky inflation and extreme systematic positioning. Thursday's PCE price index data is a definitive pivot point. A print above 0.4% month-over-month could trigger a significant repricing of the 10-year yield toward 5.25%, impacting equity valuations broadly. Geopolitical escalation in the Persian Gulf also remains a black swan event, posing a severe tail risk for global energy margins. The disconnect between a low VIX and elevated bond volatility also signals underlying market anxiety. Specific to our highlighted companies, FIVN faces risks from market share volatility. Customer churn could increase if AI agents from tech giants like OpenAI or Google begin to directly compete with Shah's platforms. A broader recession could also lead to enterprise budget freezes, impacting growth. For Okta, trust and security risks remain a medium concern. Another major breach of their core infrastructure, or a rise in sophisticated social engineering attacks, could lead to significant churn among large enterprises. Persistent high interest rates could also continue to compress SaaS multiples across the sector. Zoom faces risks from competitive displacement, particularly if Microsoft Teams successfully bundles its offerings to stifle Zoom's enterprise growth. A recession could cause online segment churn to spike, and a failure of its AI initiatives to drive incremental seat growth would undermine its bull case. In summary, the market presents a nuanced picture. We are adopting a neutral, defensive posture, emphasizing resilience and free cash flow leaders like Zoom and those benefiting from the AI infrastructure build-out like Okta and FIVN. While the S&P 500 has been strong, the underlying macro conditions, particularly sticky inflation and bond market anxiety, warrant caution. All eyes will be on Thursday's critical PCE inflation data, which will likely dictate the market's direction for the coming weeks. We hope this detailed breakdown helps you navigate these complex market conditions. If you found this analysis valuable, please hit the like button, subscribe to the channel for more insights, and let us know your thoughts in the comments below. We'll be back soon with another market update. Thank you for watching.